And good evening. This is the Elliott wave update for the S&P 500 for Monday, April the 18th, 2022. Interesting market in terms that the downside did continue, and we did see the market continue to drop after I made last night's update, and the S&P reached a low at, let me just take a peek where that is, reached a low at 4355.50 and then just rallied. But I kind of just did this, what best described as just this sideways type move until we came in, till our opening. Then we shot up, came back down, moved over, shot back up, but still had a problem really holding and staying above 4,400. We got up to 4404 just about, slid back, came back, gave it another test, got up to 6, slid back down, brought it back up to finish above 4404. And now we're still kind of holding right in that area. In fact, we're sliding back down, back towards 4,400. Now, what is going on and what does it all fit in and how does this all work? Let's kind of try to get this back open again. And so we have here the completion point for the minor second wave. And actually that is the completion point right there. And then we sail down, and I'm labeling it as minor wave 1, which actually could go over a little bit, but if I put this up, it'll line itself back up with the daily. So let's go back out to the daily, take a quick peek at what we're doing here. So again, 5 of the 5 of the 5 of the 3, all the way up there, and that 3 is pretty big. And then we do 1, 2, 3, 4, 5, completing 5 waves of minor degree down, completing intermediate wave 1, and ABC up, completing intermediate wave 2. We have begun to do the intermediate third wave decline. And that's the one that we really do now have projections that take us down to this 3488 area for the completion of this intermediate third wave, 3488. So far, I listened to a few other analysts this afternoon, people that I respect. Neither one of them had a downside target down there. We have downside targets at 41. We think we're probably not going to get below that low at 4101 that we had. And I'm like, okay, why we think we're in a big old box? And so I don't know. And these are people that use Elliott and people that also discuss Fibonacci. So again, they may have only been talking what they think the market's going to do by the end of this week. That was on one of the shows that I watched. In any case, going back down to that hourly chart, what does it tell us that we got going on here? First of all, I want to go put in some Fibonacci retracements for this wave 2. That's the one I want, right? 55 is close enough. So what we have now, let's open, oh, come on. There we go. Open it up. We have, you can see the pretty compact and pretty tight in there. The market traded and held above and below the 50-day moving average pretty much all session. Broke above it, came back, broke below it, broke above it, came back, broke below it. Now it is basically trading a little bit above it, which is good, but we're still looking. We are, hold on just a second. We are at close to the 50% line, the 50% retracement for a wave 2. That's kind of held all day, but 4405 area held all day. We got above it, came back. Now we're trading right below it. So in reality, I think that we still have more upside, because if I can count this out, there was the low, and then we have wave A, we have the B wave. There could have been the B wave, but this one got a little bit lower. And then we got 1, 2. It's a strange market. But I don't know if we're still in the B wave, or are we in the C wave up? But I'm going to look that we are in the C wave, which should finish to the upside. We have that resistance at 4405. We have resistance at 4417. We have resistance at 4426. And above that, back at that 4444 level, that keeps coming into play here, we have the 200 moving average, 200 period moving average. Now, what this wave 2 cannot do is go above 44.56. That would then break the level of wave 1, and it would no longer be a wave 2. And we'd have to go take a look at what all of this is really meaning right now. So I'm not expecting that, but I am expecting some additional upside, and we have 44.17 to 44.26 on the radar as the possible completion points for this minute wave 2. So minor wave 3 in action. Minor wave 3 will consist of 5 waves of minute degree, of which we've only finished 1. We're in the process of completing the second. That suggests when it's done, once it's done, we're going to roll over again, but be twice as big, if not 3 times as big as this drop, and be very consistent and just really kind of start to tumble down. So once that begins, then we're going to get pretty quickly back down through all of this support and resistance and start to break back below 43.55. That's going to signal, obviously, that wave 2 is done and wave 3 is in force. And then we're looking for it to start to break pretty strongly. As you can see, we got nothing. Let me go back out to that daily, and you're going to see again, we really got nothing. You got to go pretty far back. We're back into the mid-March to try to find support levels coming off. One thing that I can do is that, oops, I want to change that. I will put, come on. I'm going to put back on the Fibonacci extensions, excuse me, which will help us. Actually, it's a little bit lower, but I'll leave it there and perfect it. So on the larger intermediate third, we have support at 42.77, 78, 41, excuse me, 94, 41.32, 40.75. Now those again, just catch our breath. I think the first solid support that could possibly, only possibly, complete this wave is at 39.23, and that's where intermediate wave 3 would be equal in length to intermediate wave 1, which we know doesn't fly. Simply because wave 3 is normally the longest and the strongest. So off we go. So here we are with the estimated low for intermediate wave 3 remains at 34.84.85, right in there. So I still am looking for some good, serious downside. And first, I think we need to go up. We need to complete the smaller wave 2. Seems we're always doing these series of wave 2s, but that's what happens when you're trying to get these larger waves, which to subdivide, get them going a little bit. So we've done the minor 1 and 2. Now we're doing a minute 1 and 2, all within the ongoing intermediate wave 3 down. So continue to trade smart, use the moving averages. We can see that they were all pointing down. Now look what happened. One strong day pushes them all back into the up position. The 50 is pretty flat. The 20 hasn't crossed over, but the 4 is getting ready to, the 8's behind, the 20's behind. So things can change. Be aware, because as they change, as they turn, it does have an effect on what traders and firms are willing to start to do. As they see these moving averages move, some of them want to jump in front. They're going to come in with their buy orders right ahead of time. Again, this afternoon, we had somebody on CNBC talking about how inflation has been tamed. We've seen the bulk of it. I, for the life of me, can't figure out how they came up with that decision or that conclusion. We've had 2 months of like pretty much seemingly out of control CPI and PPI, and now you want to tell me, okay, it's under control now. We've tamed it. And now they shoved Bullard back out, which was the guy that was nervous that we're going to have to do more than 7 interest rate hikes this year, and maybe even some more next year, and that we really should be looking to 50 to 100 basis points, not the 25. Now they've shoved them back out to kind of choke and eat some of his words and say, well, I think that we should be okay with a 50 basis point rise. I'm like, okay. So when you see that, it's because someone has gone in and said, you're upsetting the market. The last thing we want to do is accept the market. That'll really drive us into some serious downside action. And we can't handle that. That'll ruin our economy. And it's like, oh my God. So ignore it and see how that works out. We'll find out. Anyway, continue to trade what's in front of you, folks. Continue to trade what the market is giving us. There's plenty of money to make trading both sides, up and down. Do not become bullish. Do not become bearish. Just trade what's in front of you and be open to the move. And we will do just fine. And so will you. So I'm going to leave it there. Our next update will be on Tuesday, the 19th of April.